morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, July 25th. Mostly lower prices overnight. Corn right now steady to about a penny lower. Bean prices down another 4 to 6 cents. Both products are lower, steady to maybe a buck lower in the meal, while oil prices are back down about another 25 to 30 points. And wheat is now lower across the board, making new lows here in Kansas City. They're down about 8 to 9 cents with 4 to 5 cent losses in both Chicago and in Minneapolis. Funds continue to lighten up a little bit on what was a record short position in corn in earlier here in July. Yesterday, they bought about another 6,000 contracts, taking them to just over 20,000 for the week. Their short position is now down to about, we got it at 320,000 versus the recent record short at 354. Open interest in corn was up another 5,000 contracts yesterday, suggesting to me that there was some end user buying also sprinkled in as well. Elsewhere, speculative trade was pretty quiet with funds buyers in wheat and meal, while being net sellers of a couple thousand contracts in both soybeans and soybean oil. Searing heat in the northern plains yesterday, 105 to 109 readings in Montana. Some triple-digit temperatures did creep into the western Dakotas as well. By tomorrow, temperatures are expected to back off a little bit in the northern plains. By the end of the upcoming weekend, however, upper 90s and low hundreds will be common across much of the southern plains and the western corn belt. Little to no rain in this region will start to stress on irrigated row crops and livestock. Much above normal temperatures are expected to expand across vast majority of the continental U.S. and really last through the first full week of August. Near-term rainfall to favor the Gulf Coast and the southeast. Scattered rains will likely impact the central and eastern corn belt as systems kind of ride up and over this high-pressure ridge currently anchored in the southern plains. We do look for slight upticks in drought readings here in today's updated U.S. Drought Monitor. However, much bigger increases next week. Exports later today should see some improvement on the recent price weakness and some of the announced sales we've seen from the USDA in the past week. That said, however, we do have some catching up to do in order to get on pace to hit the USDA forecast. Yesterday's ethanol production data was supportive as corn usage was above the pace needed to reach the USDA forecast and also the third highest of the marketing year. China this morning or overnight has reportedly bought a few cargoes of U.S. beans yesterday, while overnight they did lower their lending rate to 20 basis points to 2.3% in order to help stimulate their economy. Obviously, the bean sales yesterday to China were not particularly impressed by the market given the weak price action. Corn also has been unable to hold early gains here in the past few sessions, an indication to me that farmers are likely clearing bin space in advance of this year's what's expected to be a record yielding crop. Spot September beans just continue to be stuck in this 390 to 410 price range, looking for some sort of short covering stimulus to take us above that 410 level. Nove beans right now find themselves right about smack dab in the middle of its 2-week range, which is 1030 to 1085. Trying to find the right balance between declining yield prospects in the West while also trying to stimulate better export demand. And wheat prices, too, under a little bit of pressure. Everything we're hearing from the spring wheat tour right now are confirming what's expected to be record yields here as outlined by the USDA in the July production report. So a little bit lower here across the board, waiting for exports and Buenos Aires Grain Exchange to give updates on the Argentine crops later today as well. Thank you for listening, everyone. I hope you have a great day.